Hi, this is Joe Rabel with Invest Like a Pro. I'm going to spend some time talking about the S&P in multiple time frames again. And then I'm going to go into a little bit of detail as to why the market continues to push higher. What's the underlying reason for why that keeps taking place? And kind of give you kind of the statistics, or I should say the numbers behind the reasoning. And then finally, I'm going to show you a specific way that I use ADX. In fact, there's two different ways that I use ADX when I'm looking to identify which are the best stocks to trade or to pick, even if I want to buy something longer term. Anyway, we're going to go into the charts now and start with a monthly chart. Let's just look at this monthly again. Same pattern, nothing's really changed. We've rallied back to the 18-month. It's really not a lot of new analysis here. We've had a big down move and a rally back up. We've made it back up to the 62% retracement and the 18-month moving average. If you look at the weekly chart, we continue to try and work our way up towards the 18 on the weekly. Really the 18 and the 40, which is right around the 2950 to 3000 area. So it might want to actually push all the way up into that zone. And, you know, we're just going to have to keep an eye on it and see what kind of strength is behind the move, because, you know, this is the area where you would expect to see some sellers to show up. And it just doesn't seem to be developing that way. But, you know, every day is a new day. We can I'm going to switch to the daily here. And I think really what we're looking for is, you know, sign of sellers to show up in the form of a big red bar. I mean, it doesn't have to be that big, but something along the lines that tells us that there are really people that are ready to sell again, similar to what we saw back here. Like that was a big selling day. I mean, there was a gap. If you filled that in, that would be a lot of red for several days in a row. We just have not seen that. It continues to sort of climb. In fact, I want to point out again, I've got all three time frames. So this is a daily chart with the red line is the monthly 18 MA, which is transposed onto the weekly. Onto the daily chart, and then the blue line is the weekly 18, and that is also overlaid on this daily. So we've got three different time frames essentially and three different trends all on one chart. And the thing I wanted to point out, which I didn't in the last video, is right now the daily trend is up. And you know, we're looking for that to kind of come back. If we break through this to the downside and turn this line down, then we have more of a confluence or trend alignment where all three trends could be really construed as being negative. And that would be more of a trigger to say, okay, we're ready to start moving back to the downside. However, if this continues, this short-term trend continues to stay intact long enough to push through both the 18-month and the 18-week, you can't really look at it as negatively when you break the 18-day. If we make it through, in other words, if the short-term trend continues to push higher, it's going to neutralize the weekly trend, and we're not going to have this same setup. That's why I've continued to talk about the S&P since we worked up into this 50% retracement zone, because we're in such a critical area. This is crunch time. We're either going to turn down here, and that sets up the potential for a pretty good decline, a directional decline to the downside, or we're going to kind of waffle around in here and maybe even push up to the upside and really weaken the intermediate term trend. So, I think that is it's just a key thing to kind of keep an eye on. We can go back and look at the hourly chart again. I have framed out this pattern. Again, nothing's really changed. When you break a trend line and you frame it out like this and you have support line drawn and a resistance line drawn, I consider this to be in a transitional phase. So we're not in an uptrend, we're not in a downtrend. If it takes out the upside horizontal line, you're back into an uptrend. If you take out the downside horizontal line, you are now most likely starting a downtrend. So that's really how we frame this out. It was a little discouraging for the bears, I think, the fact that the DI line came falling back down below 25. But there is some room. There's possibility if we get a pretty good move to the downside that red could kick in again. So it's something to keep an eye on. The only other thing I would mention on the charts themselves is this daily MACD continues to hold. It's sitting right on its signal line. It's kind of a key thing to keep an eye on as well. I want to show you something. This slide is the sector weightings for the S&P 500. And technology makes up 25% of the weighting of the S&P 500. In fact, if you look at technology, healthcare, and communication services, it makes up 50% of the market. So if technology and healthcare are moving higher and they're trending to the upside, the S&P is going to have a very difficult time going down. Even if, you have materials and energy and real estate and utilities and consumer staples and industrials all just getting torched to the downside, it's not going to really matter, because if tech is moving higher, it's going to mitigate all the decline of these smaller groups. These are sectors that just don't carry as much weight in the S&P right now. Now, these change over time depending on how they do. It's just technology has been, very, very strong for a very long time. And, if you go and you look at technology, the way I defined it, I showed you guys this before. These are the top 25 stocks based on market cap. And if you look at what's taken place, you've got a really nice trend developed. All these marks on the left side are showing an uptrend for the long-term trends. And then if you go to intermediate, you can see it's more of a mixed bag. And then if you go to short-term, they're basically all positive. But overwhelmingly, I would consider the technology pretty much to the upside. The trends across the board are basically to the upside. And then let's go and look at the healthcare. And healthcare, for the most part, on the longer term trends, are still pretty bullish. If you look at the intermediate term trend, it is more of a mixed bag. And then you go short term, they're more in uptrends, just about all of them. Let's go look at stuff like the financials. I mean, the financials have a significant amount of the longer term trends are bearish, and most of the intermediate term trends are bearish, and short term is definitely more neutral. There are some positive short term trends in the financials, but not significant amount. And then if you go to something like energy, so we're in the energy sector now, look at how many stocks are in long-term downtrends on the energy stocks and intermediate term downtrends as well. This is just not, these trends are just really bearish. So if you look at how bearish the bottom two are, meaning the financials and energy, and then you look at healthcare and technology, it makes total sense as to why the market keeps climbing higher. These two sectors carry more weight, and they're the ones that have the stronger trends to the upside. So I just wanted to point that out. The other thing I think is worth mentioning is the fact that right now, this is the growth. This chart on the top there is the Russell 1000 growth, and it's had a lot of volatility and movement. But if you look at the scale underneath, it's showing the blue line there is the growth versus the value index. So it would be the IWF, which is the growth of the Russell, versus the value of the Russell, which is the IWD. And you can see what's taken place, especially starting in January of 2020. We basically just kicked off to the upside, and growth has just been destroying value on a relative basis. So, I think this is an important factor to keep an eye on. When is this going to end? I mean, because I do think everyone piling into the same 20 stocks, 15 stocks, 10 stocks, I think is a huge negative for the market and the bigger picture. But how long will it go on? I mean, I don't know. I think what I do know is that if you follow a trend analysis on this relative line, and I've drawn a trend line in, this red trend line, you're going to have to break the trend line and create a 1, 2, 3 change in trend on this relative strength line before you're going to see growth underperforming relative to value. So something to be on the lookout for. It should be a chart that you should be able to pull up, or I think a lot of people are talking about this, is the fact that growth continues to outperform. So you want to kind of keep that in mind. Uh, the last thing I wanted to do is I want to go and look at a specific stock setup. The fact of the matter is, right now, growth is outperforming value, and technology is one of the strongest sectors out there. So I always, when the market's moving higher, right now, the bias is to the upside, even though we're in a pretty critical area with respect to the market, the shorter term trend based on the daily is still up. So I'm on the lookout for stocks like this OKTA. And one of the things I really like to look at is the ADX. And if you look at what the ADX is doing, in fact, I'm going to zero in on the ADX and I'm going to go to a daily chart. And if you notice what's taken place, you had a pretty good move to the upside and then you pulled back. This is a pattern I've talked about a lot. I like to buy retracements and strong trends. So the question is, what is considered a strong trend? Well, if you get the ADX, which is the blue line, and you can get it up into the 30 to 35 to 40 to 50, probably not as high as 50. 50 is usually a sign of exhaustion. It's in a power trend when it's 50, but you don't usually get little simple pullbacks from 50. But anything between 30 to 40, if you can make a move up to the upside and then pull back to the 18 on that time frame, and the blue line, the ADX line, actually holds above 25. And in fact, if the green DI also can hang close to 25, that's a very, very bullish sign. That is the type of pattern you want to be on the lookout for. Stocks at the 18 MA where their ADX line is still above 25. Then we want to go down to the hourly. And I'm going to just show you something that I like to use as a qualifier. When we're looking for this decline and we come in the zone and out of the zone, which I talk about a lot, one of the things I'm looking for is the ADX to stay low during the decline. I don't want to see a big move. So if you compared the peak, the rally to the upside, look at the size of the buyer's peak, which is based on the green, this blue line based on the green. And then you went through a consolidation. And then during the sell-off, red took over. You can see red is above, but you can only get to 25 on the ADX line. That is the type of signal that I'm looking for that's telling me that the bias is still to the upside because the sellers cannot really take strong control. This signal and these patterns are in my book. I go into it in detail and I give you some examples. I think it's a very good qualifier. You can use this instead of this pullback on the daily. You could do this on a monthly chart if you're looking for something on a bigger picture pattern. You want to find something that's crossed up, gotten up to 30, 35, 40, and then is pulling back to its 18-month moving average. And those will be stocks that could trend, that really could trend for quite a while. So anyway, this is the pattern I think is a good one to be on the lookout for. Please hit the subscribe button, and we'll talk to you soon.